Hello again. Welcome to another episode of the Uranium Market Minute. Today is Monday, January 31st, and this is episode number 72. My name is Justin Hume. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. All right. Thank you for tuning in. As always, really appreciate all the support, all the views. If you've been enjoying this content, it's almost on a daily basis. Please like this video, subscribe to the channel, hit the notification bell, and you will be notified whenever we publish a new episode, which is almost every day. On that note, I will not be here tomorrow, as we'll be working on getting our 35-page newsletter out to members. It will be for the February edition. So we will see you again on Wednesday the 2nd. Either way, I'm glad that you're here. And before we get into today's content, as always, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. All right, let's jump right into the daily scoreboard here. The sector is firming up a little bit, which is good to see. The spot price of uranium is falling as expected, month end smackdown, down over $1 since Friday, finishing out at least as of now, 43.10 mid-market, still up about $1 year to date, although most of the gains that we saw with the bump up in spot price around the Kazakhstan unrest have been sold back down, especially in the last couple of days in the month. As I've mentioned multiple times, this is typical action for the month end. Spot yesterday did not raise any new capital or purchase any new pounds of uranium. However, they did close at a 1.01% premium to their net asset value, which is just over the threshold for them to issue shares into the market and raise cash. They need to be at that 1% premium to NAV. The stock is sold down a bit today, although the spot price is down, so they're probably right in that ballpark. Not expecting them to raise a lot of money today, if at all. As mentioned many times before, they're now sitting at a level of cash we don't expect them to spend. 23.2 million in cash currently. So basically, they need to raise more money before they're going to be buying any more uranium in any sort of significant volume. Maybe they'll do a tiny amount of nibbling, but they're probably on the sidelines until they can issue more shares into the market at that premium to NAV. So now the year-to-date total purchases by Spot, 2.7 million pounds. They've raised 122.4 million year-to-date just in this past 30 days. They now are sitting on 44 million pounds of uranium total and have raised over 1.1 billion since their August of 2021 ATM. Turning to the sector equity ETFs, URA and URNM reported no change in outstanding shares. Again, Friday, the sector actually firmed up. Today, the stocks are moving up as well. So we wouldn't expect to see redemptions coming from those days. But as I've mentioned many times before as well, there's typically a 2 to 3 day potential lag between the actual trading day and their reporting of share issuance or share redemption. So we were seeing a weak market for much of the week, although Friday was firming up. So not surprised actually to see no change in outstanding shares. Today, we're actually seeing both URA and URN up URNM up pretty substantially. So it's possible that they were issuing shares. We'll have to see. Either way, we're still in that area of the URA rebalance. They have until February 7th, which is next Monday, a week from today. So we could still see some chop between now and then, some increasing selling pressure throughout the rest of this week. We could see due to the URA rebalance, although we did see some pretty nice moves in a number of stocks in the uranium space today. So let's go ahead and take a look at the charts. Starting off, as we always do with URA. URA is the largest ETF in the uranium space, although it is not a pure play. I believe they are still at that 70% allocation to pure uranium companies. Although actually, considering that they dumped BHP, that's probably up now a bit. Either way, BHP does have a uranium aspect of the business, but they're not purely uranium. But we always look at this because it is the most liquid vehicle in the space. This it tends to be what we can track best in terms of funds flow, et cetera. As you can see, we are declining on volume on that downside, which is what we want to see. Although today we are ticking back up and the volume is still pretty low. Either way, it looks like more so than buyers piling in. It just looks like sellers might be exhausted here. So nice to see a little bit of a recovery and a darn near perfect bounce off of that long-term trend line that goes all the way back into April 2020. Resistance for about 6 months, then it became support in February of last year, support in August of last year, and again support, although we did close below it barely. But either way, nice to see a bounce at these levels. You can still see the 20-day, the 50-day, basically doing a swan dive, moving down quickly. The 200-day is flattening. So we would like to see that 50-day start to flatten and ideally start to move sideways and back up prior to crossing sharply below the 200-day, which would be definitely a bearish signal. RSI, nice bounce off of oversold levels. MACD starting to turn up. It's good to see a little bit of recovery here in the market. Sprott Physics Uranium Trust actually down over 2% on the day. So again, likely that we didn't see a whole lot of money raised, although it did seem like the worst of the trading happened towards the end of the day. And with the spot price falling, kind of earlier in the day, it's possible that they were still at that premium to NAV. Interesting, pretty big volume bar here for the day. So that's kind of nice to see. The chart continues to coil. Very positive looking chart overall, in my opinion. Cameco obviously has been trading below that 200-day for close to 2 weeks now. The 200-day is still rising, which is good to see. This chart overall has held up better than most in terms of selling off from the highs to the lows. But of course, as a large cap, it did not get those euphoric highs that were up, 2x or more above that 200-day on those November highs. So they had they fell out of the first story rather than the second story. Either way, the indicators are turning over here as well, bouncing off that oversold level for RSI. MACD starting to flatten. Volume, nothing huge here, but we did see some declining volume on the way down, which is always a positive thing, and printing a nice hammer candlestick today. All right, well, good to see a little bit of firming up in the sector. There's an interesting mailbag question I wanted to address here. So this comes from James R. And James asks, Justin, I'm hearing a lot of chatter on Twitter about a restart of McArthur River mine. Can you give me your take? All right, so for those of you who aren't familiar, McArthur River is basically the largest uranium mine in the world. It's owned by Cameco and Orano. Cameco owns, I believe they own 70% of the offtake due to their share in the mill. So 70% of McArthur's production goes to Cameco, 30% goes to Orano. And this mine has been on care and maintenance since 2018. This is a mine that Cameco took offline because of such a weak market in their attempt to help stabilize and recover the uranium market, which at the time was trading still at very, very low levels. Coming off of that low in 2016, $18 a pound. It was in the 20s when Cameco took McArthur offline and into care and maintenance. Now, McArthur River is a big mine. It has historical production of about 18 million pounds per year. They actually, I believe, can produce even more, up to, I think it's 24 million pounds a year that they have increased the license for that. They've been doing improvements to the mill that they perhaps can reach that level if they wanted to. However, this mine is the big deal for this being taken offline was that not only did Cameco take 18 million pounds of production out of production, 18 million pounds out of production, but it caused that much more purchasing on their end to fulfill their long-term contracts, and as well as Orano. So that had a huge effect, more than 100 million pound effect in the market over the number of years it's been taken offline, and that production not coming to the market, and also the purchases that it has inspired. So this is a mine that we all know will come back online at some point. And what Cameco has messaged to the market since it's been offline is that we're not bringing this mine back online until we have those pounds spoken for, at least significant enough volume of future production of McArthur River to justify reopening it. It's a major undertaking. This is a very, very complex mine. This is a very high grade mine with a large deposit. It's an underground mine in an area of the Athabasca Basin. It's essentially an aquifer. It's an underground lake where this deposit exists, and they have what's something called a freeze wall, where they actually freeze the walls of the underground mine where, would otherwise just be flooding with water constantly because of that underground aquifer. It's a very technically complicated mine, and it's been very expensive to keep on care and maintenance to the tune of, somewhere around $10 million, potentially a month. They've been spending a lot of money to keep this on care and maintenance. It's burned through a lot of cash. They're not about to turn it on unless they have fully confirmed the signals from the market and have enough of pounds of future production signed into long-term contracts at prices they like, okay? And they never really get into detail on what prices they like means, but we believe that at this point is in the 50s, okay? And these contracts are more than likely going to be partially referenced to the spot price and partially fixed. So it might be something like, for example, 50% fixed at $55 a pound and 50% reference to the spot price at time of delivery with a ceiling of $75 or $80 a pound, okay? That's the type of contract we expect that we will eventually hear some more details on that we believe that Cameco is likely signing. So the rumors essentially are, essentially rumors aside, we believe they will announce it this year, the restart of the mine this year, okay? So what does that look like? Basically, that looks like at least a 12-month process of engaging in that restart. That is hiring the workforce, that is doing further technical work to actually bring it back into production. So even if they announced it today, we're talking about 2023 for those first pounds to come out of that mine again, okay? Now, the first year of production, it's expected that will be about 4 to 5 million pounds total for the entire year. So that would be potentially 4 to 5 million pounds of uranium coming from McArthur River if they decided to announce the restart now for 2023 production. Following year would be the potential for full production, okay? But what we also are hearing is that they have been doing technical work on the mine and the mill to allow for them to flex that production more easily, let's say. So rather than either being off or fully on and producing 18 million pounds a year, they can flex somewhere in between that range depending on the market signals. So one important thing to note on this is that because the offtake is 70% going to Cameco, Cameco is not a spot market seller, okay? Cameco only sells their uranium into long-term contracts, period, okay? They don't sell into the spot market. So the 30% that goes to Orano, Orano does sell in the spot market, but not exclusively. Orano is a huge, huge multinational corporation, essentially. They are not publicly listed. They're a private company, but they operate in Canada. They operate in Kazakhstan. They operate in Niger. They have their hands in a little bit of everything, and they are a huge uranium producer and seller. So some of their sales from their 30% could go into the spot market, but we're talking about, peanuts compared to what we're expecting to be purchased out of the spot market, even by financial players. So even if half of their, 4 or 5 million pounds a year that Orano would be getting going into the spot market is really nothing. That's negligible, and that's at full production. So really, the market is likely to take this as a negative signal because that's, supply coming online. And while that's true, the signal really should be that the market is turning, and the signs and the support is there coming from utilities to justify Cameco spending this unbelievable amount of money hiring workforce and going into the process of restarting this mine. So really what we're talking about is full production from this thing. 2024 is the soonest, okay? And that's if they announce it next week is their conference call for Q4, Wednesday, February 9th, I believe. And so are we expecting them to announce it next week? We really don't know. I actually would be surprised if they did announce it. I think that maybe they'll kind of hint at the fact that they're starting to see what they need to see coming from the market to restart McArthur, but I'm not sure if they're going to confirm that they're planning to restart it. We'll have to see. Either way, we know it's coming, and we do expect the market likely to see it as a negative signal. And of course, the market will fully get it wrong. So if that's the case, then you see, well, that's another opportunity to add. And as I mentioned before, this period of time between now and SPUT's NYSE listing, which should be Q3, we're going to see chop. We're going to see chop from broad market chop. We're going to see from URA rebalance, which is happening now. And this is the review process for that NYSE listing application. So it's unlikely that they're going to come to the market heavy-handed and really stir things up during that review. So we see this moment in time as a time for accumulation. That is what we're doing. That is what we're recommending. Of course, to our members, we have specific recommendations for that accumulation. As I mentioned on Friday, we're looking at some new positions that we should be taking shortly. And either way, we see this as an unbelievable opportunity. So That's what I see coming down the pike for Cameco and for McArthur River. Fully expect it to come back online. This is a big, important mine for global supply and for Cameco especially, that has been spending a lot of money to keep this on care and maintenance for many years. They've really taken one for the team to help work through that mobile above ground inventory that's been lying around for so many years. And now that we're finally working through that, we can see that the market has turned, and we're still in the early stages here, but the market has definitely turned. This is now a seller's market, not a buyer's market. And so Cameco is going to take advantage of that. And if the market does react in the way that we expect that to react to that announcement, whether that comes next week or the following conference call, which would be in May, or just at some point in between, that the market will get it wrong if things sell off because of that, because that most of that supply is never going to see the spot market. And it does that. What that means is that long-term contracting is in fact picking up. That's a very vague area of the market because most of these contracts are under NDAs. We never really hear the nitty-gritty details on these contracts, but for them to announce a restart, that means that it's happening. And that's that moment that investors have been waiting for years and years and years. When are the utilities going to come back in force into the long-term contracting market? Now, of course, there has been contracting going on all along, but it's been less than the volumes needed to restock, let's say, because they've been able to access and bolster inventories through short-term carry trades, through the spot market, et cetera, for so many years. Once that material is finally worked through, which it basically is now, then we should see, and likely are seeing, more utility interest in long-term contracting. And it's just taken a very long time to work through that inventory. So now that the market is firming up, we believe that that interest is coming back to the market. And it's possible that Cameco will let us know soon that they are seeing what they need to see. They have signed what they need to sign, and it's coming back online. So when we hear that, that's a positive signal. That means that the thesis of a return to term contracting in a volume that is greater than just what their burn rate is, what the utilities burn rate is. And that's what we expect. Now, the utilities are relatively covered in the short term. They're relatively covered in the short to mid term, but it's the long term where we have vast uncovered amounts of uranium for both European and US utilities. So it's that term contracting 2025 to the early 2030s that we are hearing is picking up speed and will really pick up speed. So all of these pounds most of these pounds that are going to be produced by McArthur are just going to be tied up in that long-term contract market. And so what that leaves is a small amount of uranium, relatively small amount of uranium coming into the spot market to be consumed by traders and by financial players. It's sort of a bifurcated market in that way. But given that the investing side of the market watches the spot market and not really so much the long-term market, that's a sign of health that McArthur will come back online. That's a sign of health for the market, and that'll be a good thing to see. And then on the spot market side of things, well, we talk all the time about that. We know what's happening. Financial sector, essentially, I don't want to say cornered, but they're aware of the opportunity there. And it's a matter of time before they come back in heavy volume and do another version of what we saw in August and September of last year. So that was proof of concept. Concept has been proven. Now they get their big boy NYSE listing, and the next opportunity that they will have after that listing, I think, will be the potential for some very some face ripping rallies, let's say. I think that is coming after the NYSE listing. So until now and then, we'll continue to track the market and report on what we're seeing out there. Thank you for watching. I hope that you appreciate these videos. Like I said at the top, if you do, please like the video and subscribe to the channel. It helps us get this out there. Obviously, the more people that are aware of the uranium investing thesis and the potential and the growth of nuclear energy in general, it's the better it is for the planet and for our investments. So we got a win-win. All right. Like I said, I won't see you guys tomorrow, so we'll see you later in the week. Cheers.